Hey there, and welcome to Retirement Reimagined. I'm Tiffany Nyiri, Senior Living Specialist, and this is the podcast where we flip the script on senior living. Whether you're a retiree ready to take on a new adventure or just curious about how to make the most of your golden years, you're in the right place. Join me and our amazing expert guests as we dive into everything from hitting the road in an RV, getting your financial ducks in a row, exploring the perks of a reverse mortgage, or just figuring out how to link that smartphone to your car. We're here to inspire, inform, and give you practical tips to live your best retired life. So buckle up, tune in, and let's reimagine what retirement can truly be. Hey everyone, welcome to Retirement Reimagined. We have Brett Swarts here, and I'm going to let him introduce himself. He is from Florida, so all of our Florida listeners, put your ears on and get ready for some valuable information.
Thanks, Tiffany. Great to be here. I'm actually originally from California, and I just moved to Florida here just about 2 years ago. So I grew up in the Bay Area, California mostly, and then in Sacramento, and spent a little bit of time in San Diego for college. But yeah, we help people defer capital gains taxes and unlock freedom and impact when they exit their highly appreciated assets. It could be a primary home, could be a business, could be Bitcoin, something that has lots of gains, multiple $1 million of gains, and they have huge tax, and they're just like, I just would love something to give me some flexibility, some freedom from this, and be able to get passive, truly passive income, we call it. So that's what we do. We help these folks that are experiencing frustration and uncertainty when it comes to exiting, and especially being in California, New York, New Jersey, those areas, huge, massive taxes. They're looking for more wealth, more freedom versus paying a bunch of tax.
Well, and you caught my ear when you said capital gains, because I work with seniors, and a lot of my seniors, they can move, but they'll be taxed on a $750,000 gain. And when you're 80, what do you do?
Yeah, so you have what's called the 121 exclusion. I'll give you some actual deals, right, which you're probably familiar with, Tiffany, right? If you live there the last 5 years, you get your tax-free on a $500,000 gain if you're married, $250,000 if you're single. But you said they have a $750,000 gain. Let's just round it to $1 million just to keep it simple for math here.
Yes.
Let's imagine you have a house that you bought for $1 million, and let's just say it's worth $3 million, okay? And so you actually have a $2 million gain at this point, and you have you're married, so you could add that 121 exclusion. So now your real basis is more like 1.5, right? If you bought it for $1 million, okay. And so you could add, the way we like to keep math simple, just say if you lived there last 5 years, add 500,000 to your basis. Now you're at 1.5, right? And then if you're selling at $3 million, so now you have a $1.5 million gain. Or if you're in California, if it's your primary home, that's 33% tax on that $1.5 million gain. So you take 1.5 million times by 33, that's about $500,000 right of tax liability.
Tax.
So to answer your question, Tiffany, it all depends on what you want to do. Like, do you need the money to buy your next house? Maybe, maybe not. Do you even want to buy a house? Do you want to just rent? Maybe yes. Right? Great. Like, what really matters the most to you, Tiffany, or to your listeners? Like, what are you trying to accomplish? I think most people, the biggest mistake they make is they don't get very clear. They don't get clear on their mission, vision, values. They don't get clear on their calling. They don't get clear on their tax. They don't get clear on their wealth plan. They just don't get clear. Right? And if we're just talking tax and wealth, well, A, figure out what the tax liability is. What's the problem? And then B, figure out like your equity in your house. And then C, what if we could solve those first two and unlock something that you truly want, like truly passive income? So I'll give you an example. I'm actually my mom, my grandma. They've owned this piece of land in the Central Valley for like 30 years. Well, my grandma has. Mom's helped her with it over all the years. And guess what? The land's produced really next to zero cash flow. And it's been sitting there. So I said, well, what it would mean to you guys? And my grandma's turning 97 years old. Okay.
Mom's in her 70s.
Yeah. Oh. Okay, grandma. I go, what would it mean to you guys if, and the land's probably worth 225, 250. Right.
Okay. So we're not talking a lot, but it hasn't been utilized.
But for them, it's a lot.
Okay.
Yeah,
Well,
them it's a lot. So I said, first of all, you could just do that. And they're like, well, we have all this tax. I said, well, what if this? What if we could take your 200,000? What if we could help you invest that? And what if we could return just an extra about $2,600 a month? They're like, that would change our life. I said, yeah, I think it would help you get that, that car that needs to be fixed to help you to have this extra spending money. And I mean, these, Tiffany, the folks that you work with, they're fixed incomes. It's just tough, and
they can
costs
hardly
have
go to the
skyrocketed,
movies with
and
their
interest rates are
girlfriend.
going up, and
Yeah.
and so unless they have that 30-year fixed loan mortgage on their place, then they're in a tough spot, But even then, if they have that, they don't want to sell it because of the tax, and then they don't want to have to get new interest rates. So they're just rock in like three hard places, right? So anyway, I walked to my mom and grandma. I said, Mom and Grandma, okay, tell you what. I'm going to pay the tax. Okay. I'm going to gift to you whatever the capital gains tax is. I'm going to pay it out of the goodness of my heart and all the love and support you gave me all the years. I will personally pay the tax. Okay. So we took that off the table. Okay. Okay. All right, cool. Now that's off their mind. And I said, then we'll invest the funds, and about quarterly, it'll be about 16% of what things that we put it into. But I go, it'll end up being about $2,600 on average per month. If you divide it by 12, it'll actually pay quarterly. So it's going to take a little bit longer to get it going, but so let's call it about $8,000 a quarter ish. Right. And, they're like, we're in. So we're literally like listing the property now, selling it. Okay. This is kind of a small deal, but that's a personal family deal, right? So this is a big deal for them. They're like, it's going to change where they're at right now. So that's really big. So number one, get really clear. Number two, understand what the obstacle that's in the way. So now let's take this bigger. Let's say you have a $3, $5, $10 million. It could be a business sale. It could be a primary home. We did an $8 million primary home in Palo Alto, California. You see, this gentleman was single at this point in his life, and his 6 children are all gone, and all of his equities tied into his home. The other challenge is he had about $6 million of debt. So massive debt. He'd been using it, I know your strategy, right? People do cash out refis or they reverse mortgage, right? I think he just done some cash out refis over the years. Anyways, he had a lot of debt, and he's running out of money. He wants to retire, but he's like, but if I sell, by the time I sell after capital gains tax, I walk away with nothing. Doesn't make any sense. So he was like, he just threw his hands up until he met us. And I said, what if we could help you sell your property, defer all of your capital gains taxes, pay off all of your debt, and then set up a truly passive income plan? He said, where have you been my whole life? I said, I know. I wish I would have known about this earlier. And so my story is I learned about this at Marcus & Millichap, helping people buy and sell investment real estate in 2008 crash. And then the market fell apart, and I saw friends, family, and clients lose half of all their wealth. So we learned about the hard way, which is the old 1031 exchange. And then there's a new way. And the new way is an installment sale with the trust. Okay. So ready for this? This is how it all works. You sell, the funds go into a trust, and it issues you back a promissory note. You pay tax slowly over time. We line up the buyer to buy. It's a simultaneous close, and you're in a tax deferral state. So this client of mine, he actually helped people sell their houses. He actually was the #1 realtor in Keller Williams in the world multiple times. This guy's amazing luxury realtor. This is his own house. He's like, but I've been doing this for 25 years. You're telling me that I've been helping all these people and they've just been paying all their tax? I'm like, yeah. He's like, okay, well, if my CPA says yes, I'm in. And so, okay, bring your CPA. Because I'm skeptical, Brett. I've been doing this for a long time. I don't know about this one. All right, well, let's bring your CPA in. So his CPA gets my business partner's CPA tax return. Anyways, we all have a powwow. He's like, this makes sense. We're in. Did it. So he's a client of mine. It's great. It's great. So we paid off all of his debt, deferred all of his tax, and then we set up a passive income plan where he could live off slowly the cash flow in the trust. Now, Tiffany, if you have an extra 33% working for you from your proceeds, guess what? That's a pretty powerful extra amount of money coming in per year. So that's what we did, and that's what we do for people every single day. We help them build capital gains tax exit plans to unlock freedom and capital. It's pretty fun.
It does sound fun. It sounds like, you could probably talk on this all day long and just keep a smile on your face and be super excited about it. I do the same thing about my passion. But it's all about helping people that just cannot figure out or they don't raise their hand and ask for the education needed to get them out of a tight spot or an interesting spot, or do it in a way where it's financially responsible and interesting. Like, this is very interesting to me. And who wants to pay taxes if you don't actually need to? I mean, I'm all about paying my fair share, but that's my gain on my equity, on my house, my asset. So this is something that's speaking to me, and I know it will speak to others.
Absolutely. And a couple other stories too. Like Santa Cruz, California. I grew up going to the boardwalk, and riding the roller coaster that you felt like maybe it's going to break and you're going to die, and doing, the bumper cars. I remember I was too short to do the bumper cars. My cousins were all old enough. So we walked around the corner. We had those Reebok pumps where you could like pump up. Remember the pumps? You remember these things? Yes. So I pumped up my thing, and then I took my sock off. My cousins are like, take your sock off and put the sock underneath your heel. Okay. And it'll give you a couple more inches. And like, all right, well, if this thing works, this is incredible. Right. So I remember nervously getting into the line, and I put the thing in, and I walk back up, and they let me in. Right. And I'm in, baby, I'm in. And so like, I remember this, I'll never forget that story. Right. So we did the boardwalk all the time. Well, guess what? Fast forward, I'm on the boardwalk again, but this time we're helping a person sell their $7.9 million luxury home right there in Santa Cruz. Right. Mm-hmm. And, it's right on the beach. It's beautiful. And I'll never forget meeting with the client. It's actually his mom's house, and he is the son. His son's a financial advisor, very sophisticated, smart, successful gentleman. He's like, my mom's had this house. My dad's passed. Just my mom. It's a lot of her equity. Man, she doesn't want to do a 1031 exchange. We've been wanting to sell this house. Man, can you help us? So I'm like, well, let's look at it. So I sat down, went through all the numbers. We sold it, diversified the wealth, paid off debt, deferred millions in tax. He's like, Brett, this is incredible. Like, where has this been? I've been in the financial industry for decades. Like, it's been right here. I mean, I didn't know about it until you know about it, right? So it's like, you're right. So it's like, who do you know that I should know? Who do you know that has these challenges and is looking for a solution? And if they just could see, ask the question, get some awareness, and get some help, it could change their life. And so we do this over and over and over again with families. We just did with dentists out of Oregon selling a dental practice for $16 million. We did it for a San Diego client selling a car wash for $13 million. We did it in Los Angeles. We've done it in Menlo Park, Sacramento, Yuba City, Chico. We've done it in Arizona, New York, New Jersey, all across Texas, Colorado, all over the country. Bitcoin sellers, business sellers, real estate. But the point of all of that is, like, if you're listening to this and you know somebody that has multiple millions of dollars of real estate or business or any other asset, we can help them. And we can help them. And to the point of the capital gains tax and the IRS and the fair share. So what's really interesting is, the one who wins the most? It's still the IRS. And here's why. The funds are invested into businesses and real estate and the stock market. You can invest into any asset of any kind. And that actually produces jobs and creates tax revenue and creates tax. When things don't work is when people don't sell. There's no real estate fee. There's no escrow fee. There's no title insurance fee. There's no mortgage, origination fee. I mean, none of that happens. There's no new contractor coming in to renovate the house, yes, and all of the things. So taxable events happen when money can move. So we want to just remove that barrier and then get all the capital flowing. So the government actually wins the most here, and and they're getting more than their fair share.
And yes, and I didn't mean to suggest otherwise, but yes, real estate makes the world go round. Because we employ so many people with one transaction. Now, going back, you mentioned a trust. I made some notes on trust. Are we talking like a Delaware trust?
No. So the Delaware Statutory Trust is another form of what we refer to as the blockbuster method of the 1031 exchange. In fact, we're talking when that's actually more like the Hollywood video. It's in the 1031 family. You have 45 days to identify, 180 days to close. That is a very, very niche, but also pretty restrictive. We've used them. We've closed those. Okay. So no, we're not talking about the Delaware Statutory Trust. What we're talking about is the Deferred Sales Trust. Most people get it confused with the Delaware Statutory Trust. Understandably so, since it's the same acronym, DST.
Just look at that.
Now, here's the key difference is different tax codes.
Mm.
Theirs is 1031. Ours is IRC 453. IRA, 401k, 1031, 453. These are all different tax codes, different rules, different outcomes. Okay. Similar, and it's tax deferral, right? For all of those, right? So that's the power of what we do. Any asset of any kind, no timing restrictions. You can diversify into any. You not only can you exit any asset of any kind, you can diversify and invest into any asset at any time. So that's the game changer, the flexibility of this strategy. Second is we can eliminate the estate tax. So if anyone has massive estate, like their estate is 10, 20, 30, 40, $50 million, well, they have what's called a death tax problem, meaning if they die and it's inside their taxable estate, they're going to hit with a 40% death tax above what's called these exemption amounts. So here's the solution. In one day, one sale, we use our strategy. It's a 2.0 version of the strategy, and we eliminate the estate tax. We eliminate the use of having to use life insurance. We eliminate the use of having to give it all the way to charity. And by the way, we love charity. We want to give, but we don't have to force it all the way to a charitable organization, right? Also, you don't have to give any of your lifetime exemptions. Like, this is such a powerful strategy for anyone listening right now. Like, if you have an estate that's bigger than 10, 20, $30 million, we can eliminate the estate tax. Just like a sale. You need to sell the primary home. You need to sell the business. You need to sell the stock. We got to sell it while you're still alive. It's important. To a third-party buyer, we get the buyer lined up or work that out. And the funds go into a trust, and the trust will pay you over time during your lifetime. You'll pay taxes. You receive the payments. But your children can be the beneficiaries of this 2.0 version, all outside the taxable estate.
Because you planned ahead of time. You did not. Yeah. You have to plan before you start moving things around or putting your children on title. Please don't do that. So all kinds of interesting things that should be pre-planned when you have a significant amount of an estate. Now, for those that have a small estate, they don't necessarily need to. Yeah,
it's 7 million, basically single, 14 million married as of 2026.
Okay.
This year, it's double that amount. So yeah, if you're below those amounts, then you don't have a death tax issue because your estate's exempt from those amounts.
Okay, very good.
If you're a U.S. citizen. If you're not a U.S. citizen, it's like $68,000. Like if you're a Canadian citizen that has like $100 million of real estate in the U.S., the U.S. is going to take 40 million of that. It's brutal. If you're a U.S. citizen, you could have about 28, and you're married, 28 million is exempt. But keep that in mind. So we can eliminate it for no matter what citizen you are. If you're subject to estate or death tax or capital gains tax in the U.S., we can help you a lot.
So does that mean the Canadian needs to marry someone that has citizenship in the U.S.?
No, we just have to use our service. Just use our service. You don't have to do any of that stuff. That's the point.
Okay, good.
Yeah.
Oh, I missed that part. Very good. All right. This is really, really interesting information. And thank you so much for sharing it. We could probably continue talking about this for a very long time, but I think this is quite a bit for our listeners, unless you have a couple other nuggets you would like to share or a story.
Yeah. I'll just tell you about the best 1031 exit plan real fast. If you're going to do a 1031, use our best 1031 exit plan we have that gives you the ability to use a regular 1031 or use the Deferred Sales Trust as a backup plan. So it's the best of both worlds. You can negotiate the deal. You can do the deal. If it works out, great. If you don't, we have a backup plan. Or you can do a little bit of both. Maybe you want to diversify and do a little bit of the 1031 exchange, even a little bit of the Delaware, and a little bit of the Deferred Sales Trust. That's 3 different deals in one transaction. We can help you with that. We're one of the few in the entire country who's actually closed for clients all 3 of those transactions. Most are good at one of those, maybe 2. Like I said, no one's has done all 3. So we can help with that. So just make sure you go to capitalgainstaxsolutions.com to be able to find how to get all of these resources, our book, all of the things. Yeah, so you can get started.
Very good. And yes, Brett's information is going to be attached to this podcast. We're going to itemize areas of the podcast. It'll be very organized for everybody listening so that you can get the tidbits maybe that you missed and go back and listen to it. It was a lot of beautiful strategic information, which I love. And thank you so much for taking your time to share this with our listeners.
Tiffany, it's been my pleasure. Thanks so much for having me, and all the best to everyone listening. And thank you so much again.
Thank you. Bye, Brett. Thanks for tuning in to Retirement Reimagined. I hope today's episode gave you some great tips to elevate your retirement. If you enjoyed the show, be sure to subscribe so you never miss an episode. And if you found our discussion helpful, please leave a review. It helps others find the podcast too. Curious about how to unlock new financial opportunities in retirement? I'd love to chat and explore how we can make your golden years even brighter. Until next time, I'm Tiffany Nyiri. Keep reimagining.